Ever wondered what the wealthy never have to worry about? In today's video, we're going to dive into the top 7 expenses that the rich have learned to completely avoid. But it's not just about skipping the everyday expenses we all know about. We're uncovering hidden costs, luxury habits, and savvy strategies that keep the wealthy ahead of the game. Whether you want to understand how the rich think or just avoid some unnecessary costs in your own life, stick around because we're about to reveal some eye-opening secrets. Let's dive in. First up, we've got depreciating luxury items. You see that brand new Mercedes G-Wagon, the one everyone wants? Yeah, that thing is going to lose half its value in the first 3 years. The wealthy know that not all expensive things are created equal. Instead of splurging on items that lose value over time, they focus on luxury investments that appreciate. Now, I'm not saying all rich people avoid new cars, but they're thinking differently about it. They understand it's a business expense, or they're okay losing that money because their net worth is so high. But for someone trying to build wealth, it's a terrible idea. Instead, the wealthy look towards things like rare cars, high-end watches, and collectible art. These aren't just for show, they're assets that often increase in value over time. Think about it, a 1960s Ferrari 250 GTO just sold for over $55 million. That's more than most people will make in their lifetime. For the wealthy, it's not just about having things, it's about owning things that grow wealth over time. They see these purchases as investments, not just expenses. So, next time you're tempted by that shiny new toy, ask yourself, is this going to make me money or is it just going to cost me money? If it's the latter, you might want to rethink that purchase. One expense the rich avoid like the plague: credit card interest. Seriously, they hate it, and for good reason. The average American household with credit card debt pays over $1,000 a year in interest alone. That's money that could be going towards investments, savings, or even just a nice vacation. The wealthy understand how detrimental high interest rates can be. They know that carrying a balance on their credit cards is like throwing money away. Instead, they use credit cards strategically to their advantage. They'll use credit cards for the rewards points, the cash back, and the travel perks. But they pay their balance in full every single month. They're not giving the credit card companies a single penny more than they have to. Think of it this way: would you rather pay 20% interest on a pair of shoes or get those shoes for free? The wealthy choose the latter. They use credit cards as a tool, not a crutch. If you're serious about building wealth, you need to get your credit card debt under control. Start by paying more than the minimum payment each month. Consider a balance transfer to a lower interest rate card, and whatever you do, don't fall into the trap of only making the minimum payment. That's a recipe for financial disaster. Want to think like the wealthy? Make paying off high interest debt your top priority. The third expense the rich rarely worry about is late fees. Whether it's on bills, loans, or taxes, they make sure they're never hit with extra costs due to poor timing. Because, let's be honest, late fees are just the worst. They're like a punch in the gut for your wallet, and they're completely avoidable. The secret here is organization. The wealthy typically have systems in place, whether it's automated payments, accountants, or financial planners, to ensure that no unnecessary penalties come their way. They're not staying up at night, worrying about whether they paid their electricity bill. They've got it handled. By simply staying on top of payments, they save a surprising amount of money in the long run. Think about it, even just a few late fees a year can add up to hundreds, even thousands of dollars over time. That's money that could be going towards investments or other financial goals. Now, I know what you're thinking, Graham, I'm not rich, I can't afford an accountant or a financial planner, and you know what, that's okay. You don't need a fancy team to stay organized. There are plenty of tools and resources available to help you manage your finances. Start by setting up automatic payments for your bills. Use a budgeting app to track your spending and income. Set reminders on your phone for upcoming payments. There are so many simple ways to stay organized and avoid those pesky late fees. Remember, the wealthy understand that time is money, and they're not going to waste either on something as trivial as a late fee. The wealthy understand that quality over quantity is key. They're not going for the cheapest option every time, because in the long run, that ends up costing more. It's the old adage, you get what you pay for. Instead of constantly replacing cheap, low-quality goods, they invest in higher-quality products that last. Whether it's clothing, appliances, or even furniture, they know that spending more upfront can actually save money over time. Think about it. A $50 pair of shoes that falls apart after a few months might seem like a good deal at first, but if you have to replace those shoes 3 times a year, you're spending $150 annually on footwear. You could have bought a higher quality pair of shoes for $150 that lasts you several years. The wealthy understand this concept of cost per wear. They'd rather invest in a well-made suit that will last them a decade than buy a cheap suit every year. It's about making smart, strategic purchases that provide long-term value. Now, I'm not saying you need to go out and buy the most expensive version of everything, but I am saying that it's worth considering the quality and longevity of a product before you make a purchase. Sometimes spending a little bit more upfront can save you a lot of money in the long run. Chapter 5: Lifestyle Inflation. Next, let's talk about lifestyle inflation, the tendency to increase spending as income grows. It's a slippery slope that can sabotage even the most well-intentioned financial plans. You get a raise, you buy a nicer car, you move to a bigger apartment, and suddenly you're back to living paycheck to paycheck. While it's tempting to upgrade everything as your financial situation improves, the wealthy are strategic about this. They understand that lifestyle inflation is a silent wealth killer. Instead of dramatically increasing their spending every time they make more, they prioritize savings, investments, and maintaining a balanced lifestyle. They ask themselves, do I really need a bigger house, or am I just trying to keep up with the Joneses? They're content with their current lifestyle and focus on building wealth rather than showcasing it. This doesn't mean the wealthy never upgrade their lifestyle. They do. But they do it strategically and intentionally. They might upgrade their house after years of saving and investing, not just because they got a bonus. The key takeaway here is to be mindful of your spending habits as your income grows. Don't let lifestyle inflation eat away at your financial progress. Focus on building a solid financial foundation first, and then enjoy the fruits of your labor responsibly. Chapter 6: Avoidable taxes. Let's be real, nobody likes paying taxes, but the wealthy understand that taxes are a part of life. The difference is they're not just blindly handing over their hard-earned money to the government, they're masters of tax planning. While we all have to pay taxes, the wealthy understand how to use the tax code to their advantage legally. They hire accountants and tax experts who help them take full advantage of deductions, credits, and investment strategies that minimize their tax liability. They're not afraid to ask questions, explore different options, and find ways to legally reduce their tax burden. They see it as a game, and they're playing to win. Now, I'm not saying you need to become a tax expert overnight, but I am saying that it's worth investing in professional advice, especially as your income and assets grow. A good accountant can help you identify tax-saving opportunities that you might not be aware of. Remember, the wealthy didn't get rich by paying more taxes than they had to. They got rich by being smart, strategic, and proactive about their finances. Chapter 7: Time wasted on small tasks. The last expense the wealthy avoid is a bit different. It's not on a balance sheet, but it's just as costly: time wasted on small tasks. The wealthy understand that time is the most valuable resource. You can't make more of it, and once it's gone, it's gone. They delegate tasks that don't require their direct involvement, whether it's hiring assistants, using tech tools, or outsourcing chores. They focus on high-value activities. They ask, what is my time worth? If they can pay someone a fraction of their rate to handle errands, they'll do it. It frees up their time to focus on making money. Now, I know what you're thinking. Graham, I'm not a millionaire. I can't afford to hire a personal assistant. And you know what? That's okay. There are ways to outsource and delegate tasks without breaking the bank. Identify tasks that take up time but don't need your specific skill set. Can you hire a cleaning service once a month? Can you use a grocery delivery service? Can you automate your social media posting? Remember, the wealthy understand that time is money, and they're not going to waste either on something as trivial as a late fee. By delegating tasks and streamlining their lives, they free up more time to focus on what truly matters: building wealth, pursuing their passions, and enjoying life. And there you have it, the top 7 expenses the wealthy avoid. From dodging credit card interest to skipping lifestyle inflation, the rich have mastered the art of financial efficiency. They understand that building wealth isn't just about making more money, it's about keeping more of the money you make. Want to start adopting their habits? Begin by focusing on quality, staying organized, and investing in your financial future. Remember, small changes can make a big difference over time. Start implementing these strategies today and you'll be well on your way to financial freedom. If you found these insights helpful, don't forget to hit that like button. Subscribe for more videos and let me know in the comments which expense surprised you the most. Thanks for watching, and I'll see you in the next video.